Hello guys, welcome. So today we are going to be looking at points of interest or area of interest. So before now, most of us may have heard about this or know this, but I want to list out several points of interest that we use in the market to buy or sell. So we have the mitigation block, we have the breaker block, we have the fair value gap, and we have the order block. So these are some of the points of interest we use to trade in the market. Now, usually there are several of them, 7 of them, known as the 7 institutional reference points as dictated by ICT. But out of these 7, these are the 4 most important ones I consider personally, okay? So I've traded these guys and I've seen how effective they are technically. So that is why I'm going to point them out. So the rest of the 3, I won't really point them out, not really necessary for me. But if you think you want to know more about that, I'll list them out separately. 5, 6, and 7. So that is the liquidity void, rejection block, old lows, and old high. So you can study this on your own. I won't be talking about these other 3. I just want to focus on these 4 above, right? So these are more important to me. So mitigation block, what is mitigation block? So mitigation block is as a result of what? Failure to swing. What does that even mean? So failure to swing means it failed to take out liquidity before breaking structure to the opposite direction or as a continuation. But we'll look deeper into this. So before now, for example, we want to look at a bullish market structure or a bullish trend. So we have something like this. Series of higher highs and higher low, breaking structure to the upside. Now that is a bullish market. Now market pulls back, expecting to push higher to break this structure to the upside. It failed. Rather, it reversed and broke structure to the downside. That means this is what? A failure to swing. Price failed to break this structure before changing character, if at all. Rather, it's pushed, giving the impression that it wants to go higher to take out this previous high, but it stopped somewhere in between and reversed and rather broke the structure in the opposite side, which is breaking structure to the downside. Now, for that case, this is now what? A change of character, right? So we now have our mitigation block here. So that is to say, price will what? Pull back or give a correction, mitigate this mitigation block, and what? Continue pushing down to break a new structure to the what? Downside. So this is what we call the mitigation block. Right? Now, before I'll be able to explain the mitigation block very well, I'll talk a little about other block. So a mitigation block, in this case, this is a bearish mitigation block. Take note. So a mitigation block is a failed order block is a failed order block that was supposed to take out this liquidity above this high, but it didn't take out this liquidity. Rather, the order block failed. So because this order block failed, we are now going to use this order block as what? A point of interest to keep what? Selling, because sellers order or sellers came in aggressively, and that push to the downside needs to continue for a while until otherwise, right? So since this is the bearish mitigation block, we are now looking to sell from it, and our next liquidity target should be what? The immediate low that started the what? The correction or the pullback. So a mitigation block is also seen as what? An M pattern according to retail traders. So if I trace this part of the price leg out, it looks something like this, right? So price failed to take out this high before breaking structure to the downside, as well known as what? A change of character or market structure shift. Now, retailers will see this as what? A double top or M pattern, and they will call this the neckline, right? And what do they expect to see? They want to see price coming back, retesting the neckline, and keep pushing down, right? Also known as what? Support turn to what? Resistance. So this is what they have been trading ever since, without knowing that this is what? A mitigation block. Now, a failed order block that was supposed to break this high or fail to break this high or sweep liquidity above this high and fail to the downside. Then when price return, we are going to use that as our what? Point of interest or area of interest to what? Keep selling. So I believe this makes sense. So we are going to go to the chart and let's look at how it appears on the chart. So this is an example. So you can see that this is a bullish trend. Now look at this. I'll start from this low. So market was giving us a low, a high, a higher low, a higher high, a higher low, a higher high, a higher low, a lower high, and what? A lower low, right? So if I bring this part 2 out, it looks something like this. So you can see and agree with me that this is a bullish market structure or an uptrend where price has been breaking structure to the what? To the upside. Breaking structure to the upside. So we are expecting for price to break this structure to the upside. We're expecting for price to break this structure to the upside, but it failed, right? And give us a break of structure to the what? Downside. Now, this is what I mean. You can see that this look like the letter M, or what retailers know as what? A double top. And they're expecting for price to retest this level or this area. So now, there used to be a point of interest here that was supposed to cause price to break this high. But because it didn't do that, rather failed, so we expect that price sometime in the future pull back or give correction into this area of interest and what? Continue pushing down, breaking more structure to the what? Downside. So this is what retailers see as what? A break and retest. Support turn to what? Resistance. So like I said, a mitigation block is characterized by what? A failure to swing. Had it been this leg of price went above this high, then maybe we'll have a break of structure before changing character. Then I'll not consider this as a mitigation block. This guy, I mean. So the name is going to change. But because it didn't take out liquidity above that high, you can see it failed. That means I am expecting that price should revisit this area for me to enter what? A sell position. then I'll have my stop loss above that point of interest, and my next liquidity target should be below the lower low that created or started this pullback. So I believe this makes sense. I don't want this video to go longer than 10 minutes. So I'm going to stop this here. There'll be a part 2 of this. So watch out for the part 2. So I would like you guys to engage on this post, like, comment, and share. Keep watching this until it makes sense. You don't see content like this and you watch it once and you want it to make sense. So try to watch it as much as possible, right? So that you will get the knowledge which this video was made for, right? So if you think you're having difficulties or challenges in your technical analysis, you can send me a direct message. Let me walk you through how I see the market. So thanks for watching, guys. God bless you, and see you on my next post.